Hello and welcome to BQ Prime. You're joining us on this special conversation with Fusion Microfinance and the MD and CEO of the company, Mr. Devesh Sachdev. Mr. Sachdev, welcome to BQ Prime and thank you for joining us on this conversation. Fusion Microfinance is going for an initial public offering. The offer opens on the 2nd of November and closed on the 4th. As part of the offer, the company is looking to do a fresh issuance of shares of about 600 crore. And it is also announced that there will be some amount of offer for sale by the promoters as well as some of the other shareholders of the company. Mr. Dev, if you could just take us through the details of some of what exactly you're trying to do through this IPO, where these funds are going to be used, that'd be very helpful, sir.
Yeah. So Vishwanath, a very good morning, and it's a pleasure to be on your platform. So I will, before I come to the issue, overall contours of the issue, I will first like to give a very brief about Fusion Microfinance. So I share the first headline numbers. We are right now the second largest in terms of AUM in the NBFC MFI sector. As of June, we have the largest customer base in the NBFC MFI sector. We have 2.9 million customers. Our portfolio outstanding is close to 7,400 crore as of June. Fusion has close to 1,000 branches. We are present in 19 states. We are in around 377 districts of India. We are a rural MFI, Vishwanath. We believe that we started our journey in 2010. In the last 12 years, I think we are the youngest company to reach this scale. So I think there are 3-4 things I would like to share with you, which we think that we have done differently, and because of which we are now sitting here. So first thing we believe we did right was to become a diversified company since beginning. We are organically diversified company by birth. So as I mentioned to you, we are in 19 states. Not a single state where our concentration is more than 20%. Not a single district where concentration is more than 3%. So we are completely diversified. We also started from some of the difficult markets like UP, Bihar. So let me tell you, in the top 5 states for us is Bihar, UP, Odisha, Tamil Nadu, Madhya Pradesh. So that is one big highlight what we bring on the table. The second thing, I think, Vishwanath, what we bring on the table that we have shown over the last 12 years that if you blend the risk and growth, I think it's a right mix of risk and growth, you can grow sustainably. Just to give you some example, as I mentioned, there are caps on the portfolio on a particular state, particular district, particular village. Similarly, if you see on the average outstanding, our average outstanding is 25,000. We still is one of the lowest if you look at the top 10 companies in the sector. Right. If you look at our disbursement, our ability to add new customers last year, 21-22, Vishwanath, we added 600,000 new customers. So I think this is one. And then if you look at our capital adequacy, Vishwanath, we have never gone less than 20%. We have kept the company well capitalized. We have been able to attract a marquee investor like Warburg Pincus. Warburg Pincus in 2018 invested in us when we were around 2,000 crore of portfolio. Now we are at 7,400. Globally, in the microfinance space, Warburg Pincus has not done any investment except Fusion Microfinance. The third thing, I think, Vishwanath, which we bring on the table is the team. So one of the most stable team, the core team, I don't think many banks or many NBFCs can claim this. Since 2016, so just to give you an example, my CFO is with me for last 6-7 years. My CEO, Tarun, is with me for last 6-7 years. My audit head is with me for last 8-9 years. My compliance head is with me for last 10 years. So similarly, in the middle management, so I think we bring a huge experience across, all the 5, 6, 7 senior people. Our experience is more than 100 years. And the fourth point I want to highlight here is the kind of liability management we have managed. You will appreciate, Vishwanath, that in the NBFC space, how you manage. We have built a very, very robust, liability management. Just to give you some example, right now in our liability, mix, public sector banks is around 20%. We have all the Maha banks. We have SBI as the largest lender. In the private sector, around 35%. The banking share is around 83%. So ICICI Bank in the private sector is our biggest lender, followed by Axis Bank, IDFC, HDFC, Bank of Maharashtra. So we have built a very, very robust liability management. So I believe that we have built a very, very sustainable, a well-rounded company, including the IT. So, and that's why we we have the size. We are now 7,400 crore, and we are coming. That's why we wanted to now, and the journey has been very organic. We wanted to tap the capital markets. So coming to your point on, yes, 600 crore is the primary, and the primary, basically would be used to further augment the portfolio, use it for expansion of or doing more disbursement, and as we see a huge growth potential.
And the shareholders that are selling about 1.37 crore shares, that includes you and your wife as well. I'm just curious to understand what that would work out to. I mean, cumulatively, what does the IPO size look like?
Yeah, overall IPO size is 1,100 crore. So 503 crore, 1,103 crore, 500 crore is a secondary this thing. So let me tell you that we have two early investors, Oiko Credit, which is Amsterdam-based fund, and a Spanish fund, Gava, early backers of the company. They came in the company when company was very small. I remember we were not even 500 crore when they invested way back in 2014, 15, 16. So one, I think they have been instrumental in making sure that we were able to welcome Creation Investment in 2016 and Warburg in 2018. So now I think they have played their role. They are completely exiting. Most of my shareholding is locked in as a promoter lock-in for the next 3 years. So very, very little what we are selling, because I believe, and both my strategic investors, Creation and Warburg, are also selling very little. They stay invested because we all see a huge value going forward.
Right, sir. Let me come to some of the more specifics about Fusion Microfinance. Now, you said that you have about 1,000 odd branches across 377 districts. I'm just curious to understand, in your prospectus, you mentioned that about 7 North Indian states account for about 42% of your entire AUM. Is there a concentration risk that is building on this portfolio? Do you foresee that this will probably come down as you use this capital to grow further?
So again, coming back to the point, I think the way we have managed risk, I think, as I mentioned, not a single state more than 20%.
Right.
So if you look at the opportunity in UP, for example, 20 crore population overall, microfinance penetration is only 15-16%.
Right.
We believe that we are in the geographies where there's a huge potential to grow.
Yeah.
But as I mentioned to you, we have an eye on the risk also. We will be prudent, but making sure that we grow in these geographies. We see a huge potential in all these geographies because we are the very few companies who has been able to establish very successfully in some of these markets. So these are our core markets, and not only that, if you see Bihar, we are number one, in terms of our portfolio in Bihar. Similarly, in Odisha, we are in top 5. Tamil Nadu is also a part of. So we are more of a pan-India player, Vishwanath. So, and I think growth will continue in the same spirit.
Okay. When you're looking at growth now, the RBI has changed the ground rules a little bit over the last year or so. If you were to look at pricing caps, that has gone away. There is a new definition for microfinance loans as such, who you can lend to and how much you can lend to, depending on the family's annual income. I'm just curious to understand what this does to your strategy, or was it always aligned to the new rules?
So very good point, Vishwanath. So in my view, regulator has done a wonderful job. So I must credit our regulator, Reserve Bank of India, for making sure that the sustainable growth of the sector. Just to give you a sense, when I started in 2010, when Fusion we started, the sector was around $3 billion. Today, the sector is around $35 billion. It is primarily because the right conducive policy environment was created. So coming to the new regulation, I think these are very, very positive for the sector for 2 important reasons. One, as you rightly mentioned, that earlier there were caps. There were caps on the margin. The price has been deregulated because Reserve Bank of India now has the confidence that the sector has grown to a sizable size and has become more responsible. So in that sense, I think, and it has created a slightly more elbow room to build more sustainable ROAs and ROEs. So that is one. So I think from that perspective, from the sustainability of the organization's perspective, I think this is a very, very good move. Also from the client, as you rightly mentioned about the new rules of assessing the customer, you would have noticed that earlier there was an arbitrage where the rules were only applicable on microfinance sector, NBFC per se, which were only 35% of the overall pie. Now with the uniformity and everybody has to follow these rules, I believe this will increase the sustainability of the clients. It will reduce the over-indebtedness of the client. And especially for companies like us, where our ability to add new customers, as I mentioned, last year we added 600,000 customers, I think, and our network, if I can tell you, 25% of our customers are unique to us. They are new to the credit. So, and our overall expense puts us in a very, very strategic position to take a benefit of these guidelines.
Okay. Okay. Coming to some of the risks that you have specified in the prospectus, there were instances of embezzlement, small amounts, of course, in 2020 as well as 2021. And you also point out that you deal with cash quite a bit, considering the geographies that you function in. I'm just trying to understand, these two are likely to be linked, but how do you counter such a situation?
Again, Vishwanath, let me just take you back to 2016.
Sure.
Prior to 2016, Vishwanath, both the disbursements to the borrowers and the collection was completely in cash. Over the last 6 years, again, we have to credit the government of India for creating a conducive environment, Aadhaar, Jandhan, digital push. Today, 96 to 97% of our disbursements, Vishwanath, are going to the bank account. So we are, I think microfinance as a sector is playing a big role in making sure that those accounts remain active. So that is one. So from the disbursement point of view, we have completely taken out, as far as the risk of the cash is concerned. Similarly, now let me talk about on the collection. So Vishwanath, if you will appreciate that we are a rural MFI. We want to grow with the customer, be more organic. But in spite of that, now 25 to 30% collections are cashless. We give a passbook to our customer. In every passbook, there is a QR code. The customer can scan and make a UPI payment. We are working with the customers because in their ecosystem, they still use cash. We are doing a huge, financial literacy, digital literacy. We are trying to encourage them to move to this thing. But that's what I'm saying, that overall, if you see, a huge reduction in the cash in the system has happened. And then we have all other, means on audit and everything, which we have strengthened to make sure that we are able to manage this risk well. And I think overall, if you look at the overall size of the company, these are very, very minuscule in terms of the overall size of the embezzlement cases, what you mentioned. Okay.
Speaking about the RBI as well, so there were some observations that the RBI has made, which it does in its normal course of reviews of banks as well as non-banks. Do you feel that you have adequately responded? Do you feel that the RBI is unlikely to come back with more sort of feedback?
All the last audits which have happened, let me tell you, we have not a single open point. Everything has been responded and it has been accepted by RBI.
Okay.
We are very, very responsible organization. Let me tell you, Vishwanath, I'm not saying this because we are coming for an IPO, but I'm saying if you look at our 12-year history, we are highly governed. We want to work within the rules. Fusion is a very, very committed. We understand the ecosystem. I'm also the chairman of our AMFIN, which is a association of our this thing. So I come with a mindset that you have to really follow the rules, because I think that is one of the reasons that today we are sitting here. That in the last 12 years, how we have been able to grow, it is primarily because we have been very, very prudent, very focused, very responsible as an organization.
Okay. I'll come to slightly more positive questions, but the idea here being that you came into the industry during a sort of a decisive moment for MFIs. In 2022, we are again sort of in that same space. what does the next 10 years sort of look like? What do these 10 years look like for Fusion, as well as the broader microfinance space, now that the rules of the game have changed again?
Yeah. So you rightly mentioned that, when I came when we started Fusion Microfinance 2010, this was just before the Andhra crisis.
Yes.
The rules, Malegaon committee was set up, new rules came in. And I think we were I was very, very happy when those rules came, because, I thought, okay, fine, you are going on a highway, and everybody has to follow a certain speed limit.
Yeah.
So in that sense, every, well-governed companies actually want to work under a certain rules, and I think that is the reason, as you see, from, starting in 2010, we were very small and now becoming the second largest in just a matter of 12 years. We were 25th in India in 2016, now second in India. So because we have been strategically, we have took some right decisions. Similarly, going forward, I can only talk about that I see a huge opportunity. We are rural MFI. We are making a platform, or we have network. We have the right people, Vishnath. We have the experience of the geographies. And also, you see, rural is now very aspirational. It has to be seen as a very separate asset class. Rural, right. Everybody is talking about that. I think that's where, our future strategy lies. We have the customer base. We have now, as I mentioned, 2.9 million customers. We have their data. We have to understand. We have the understanding of the geographies. We have the people, and we are creating a right platform to really fulfill all the needs in future. But okay. I see a huge potential for microfinance sector and Fusion per se.
Okay. Lastly, just coming to the prospects of a microfinance company. Now, this is a question I tend to ask every microfinance leader. But the question here is, what is the future of a microfinance company? Does it continue to always be a microfinance company? Or do, like some of the other players in your field have gone into small finance banking, gone into universal banking? Is that something that's the most natural sort of progression?
So you're right. I think as far as we are concerned, we are completely focused. We have two engines. One is microfinance, and very recently in 2019, we started MSME.
Okay.
Both MSME is very small right now. It's a 200 crore portfolio. We are focusing on secured loans. I believe that right now we are completely focused, Vishwanath. There is nothing like a SFB or a banking license on the horizon, on the table. We are very focused to create a large organization, a good organization, also create a sustainable return for all the shareholders. So I believe that there is a space for a large NBFC to cater to the needs of the customer if it is well run. So I am completely focused there. We don't want to. There's nothing like banking license on the table.
And this is despite, say, the vulnerability that some of your customers would have. I mean, we saw that during the COVID period. Most microfinance companies saw customers struggling to repay their loans. Companies themselves were struggling to find capital from the other lenders. This is despite all of these things that you believe that this is the sector to be in right now.
Absolutely, Vishwath. You have to appreciate that in the last 12 years, the sector is today the second largest after mortgages. Any sector which is a new sector, this customer, you are rightly mentioned, is a vulnerable. But if you work with the customer, we have seen many challenges over many cycles over the last 12 years. And right. Today we are standing tall because we have a fundamental belief. We believe that the customers need us. There is a demand. We also have the right levers of people, process, risk management to really manage some of these cycles. And we have done that. We are standing today after looking at all, navigating, not only navigating, but I think thriving in some of these challenges. When the COVID started, Vishwanath, we were 3,600 crore of portfolio. We have 7,400 crore of portfolio now. So I think, and look at where our customer base has moved. Our CAGR in the last 3 years has been around 36-37% in the midst of the biggest crisis, the global pandemic, so I think there is a fundamental need. And that's why the model is robust. Customers have a huge belief. And I will really urge you to take out time and visit some of our branches to actually see how we make an impact.
That'd be very helpful, sir. Thank you so much for joining us this morning, Mr. Sachdev, and all the best for the IPO that's coming up. Thank you.
Thank you, Vishwanath. It was a pleasure. Thank you.